Financial institutions with some exposure to the real estate sector were not spared on Tuesday. But curiously, the Nifty Realty Index is one of the best performing sectoral indices this year. Part of the reason could be attributed to the dominance of some of the bigger and financially stronger real estate developers, the most prominent of which will be Godrej Properties. The stock has outperformed the index by a mile this year. Sharad Dubey is here to tell us just why the Godrej Group has managed to do so well in an index which is also done reasonably well. Sharad.
Yeah, good morning, Neeraj. I think Godrej Properties is one of the key beneficiaries of the consolidation seen in this industry, post the ILFS crisis, and even the housing sector, which is grappling with a slowdown and an inventory pileup. And if you just pull up the MRR chart, we see on a year-to-date basis, the company has, risen by more than 50%, while the Nifty Realty Index has risen by almost 6.8%, and other peers like Brigade Enterprises, Prestige, and even Phoenix Mills, they have all increased between 11 to 40%. Now, if we see this comparison, with the Realty Index and Godrej Properties, we see there's a huge, kind of a difference between them. As the last 5 years, the Nifty Realty Index has risen by almost 23%, but Godrej Properties, has been, the leader of the pack with 320% gain, almost 4 times its values we see, and each year it has, actually performed really outperformed, for all the indices and also its peers. Now we see the main reasons, the first one being the joint development projects, which the company undertakes. So it's a unique kind of a business model. So whereas it doesn't actually, pay for the entire land, or it doesn't pay for the entire project, but it ties up with other developers. So this actually helps, the company to gain access to a good fund raising platform. And also, since the company is having a strong parentage, it actually helps company, raise capital, and also, they get it at a, competitive rates. So if you see the joint developments, from FY18 to almost Q1 FY20, it has almost increased, almost doubled, from 64 million square feet to almost 110 million square feet. Now, in terms of bookings value, you see the growth has been, going really nice, and the compounded growth has stood at almost 17% if you see compared to its peers like Brigade, Sobha, Oberoi, and Prestige, which ranged between minus 0.1% to 4%. Now, in terms of bookings, in terms of sales value, over the last 5 years, the bookings, the sales value has actually increased from Godrej Properties from 2,681 crores to almost 5,316 odd crores. That's almost doubling. This has been led mainly because of the 9 projects, which have come in the second half of FY19, which has actually pushed up the numbers. But while for other players, these numbers remain range bound. Now, lastly, we see the launches which have been coming in this, for the company, and this has been a steady increase, or going throughout from FY15, from 5 it has increased to almost 16 in FY19, and 3 has already come for the first quarter this year. So that's almost 47 projects, or even more than that, they have come up over the last 5 years. And in order to look forward, you see for FY20, almost 11 more projects with almost 8 million square feet of space is lined up. So that is something which we will be watching out for. And Neeraj, one more thing I would like to add up, the brokerages are very, positive when it comes to the cash flows which will be generated from these joint venture projects. They are going to come in the next 2 to 3 years. So that is something which we will be looking out for, Neeraj.